Welcome to PrimeAlpha's interview series, insights from industry practitioners discussing their journey and their discoveries. Hello, my name is Amanda Drogia, the CEO of PrimeAlpha, an online ecosystem bringing together alternative opportunities and their investors. I have the pleasure of introducing Ulf Lindahl, who is CEO at Currency Research Associates. Ulf formed the company in 2020 after 40 years as the co-founder and CEO at AG Bisset Associates, a currency manager with $3 billion in AUM at its peak. Welcome, Ulf.
Oh, good to meet you again, Amanda. I'm happy to do this.
Excited to have you here. I love the fact that you're dealing with FX. We don't have a lot of FX specialists on our platform, so you're our go-to person.
Well, thank you. Yeah, FX is something that's being neglected, I think, in most investment management.
We got to hear the story. So tell me about your journey, Ulf.
Well, I guess my formal education was at Stockholm School of Economics. I graduated in 1980. But before I did that, I had the chance to come over here and work for a summer with a small startup firm on Wall Street as a trainee run by another Swede. So I quit in the middle of school and came over and did that. And then I went back and finished my education and was invited to come back to the same firm. So I gladly did that. And then we hired Fred Bisset out of E.F. Hutton to do our marketing. And he had developed a currency advisory service that we were then selling to corporations and money managers around the world. So that's how I got started in terms of getting into the business. And then in 1981, the day that President Reagan was shot, Fred Bisset and his Swedish partners decided to part ways, and I had to make a choice. And I chose to go with Fred Bisset. So he and I co-founded AG Bisset a little bit later that year. And that's how we got into the business. And then we ran that business until 2020 when I started Currency Research Associates.
Describe for me that pivotal point in which you decided to do Currency Research Associates, and what was the catalyst?
Well, I think that the catalyst was really that we had built our good advisory service and reached many large corporations around the world. And as U.S. pension funds started to invest overseas, they got the currency risk associated with those investments. And they discovered that money managers, on average, had no clue about currencies. So the concept of currency overlay was born. And we got our first mandate in 1992 from the Alcatel pension fund in Belgium. And we managed that for 20 years. And that grew to other mandates, like $1 billion mandate for Shell's pension fund that we ran for 10 years, And we continued to grow our assets. And as you mentioned in the introduction, we had about $3 billion at the peak. And then the financial crisis came. So our assets started to shrink as the underlying assets kind of shrank as well. So as we continued doing this, unfortunately, Fred Bisset passed away about 3 years ago. And we continued the firm. But his children had really no interest in continuing the firm. So I made a decision with the pandemic and all to buy out all the intellectual research and the models, the Review of Emerging Trends, which is our flagship publication. And then I started Currency Research Associates on my own to move forward to do what I really love.
What's the opportunity set you're seeing in the market right now for your research?
Well, the research that we do, the Review of Emerging Trends, is a research report that focuses on currencies and how those trends in currencies influence trends and fixed income in equities and commodities. They tie together very closely. And most money managers, even if they're just focusing on domestic issues or domestic shares and markets, are really very ignorant of the currency issue. And they say things today they said 10, 30, 40 years ago about currencies that are completely untrue. So we have a niche of explaining to people about currencies and what they're doing and how they will impact their investments. And this goes for not only investment managers, but family offices and corporations and pension funds. They all have currency exposures, whether they know it or not. So that's really the opportunity set. And we've developed substantial skill in this area. So we have something that we can contribute to their money management.
So how do you help your clients?
Well, we do now the Currency Research Associates. So I published this Review of Emerging Trends, which I have published since 1984. And it's a focused view of the cycles and the long-term trends that unfold in the markets. And by framing these issues for clients in a perspective that they don't really have, we help them make better decisions as to where they should make asset allocations, whether they should be in or out of markets. And we also help them anticipate what major moves in these markets can do for their portfolios. And many of them have really no clue what the currencies can do to their assets and how big an impact they can have at various times. So that's how we help them with strategic and tactical advice and framing their thinking about these issues so that they kind of understand why some things that happens seems to be disconnected from the world, but actually derives from some of these very large cycles that are unfolding.
I remember when we did our video a while back. And
yes, that was fun.
That was fun. And you gave a good example of how your research or that strategy can impact a person.
Well, there are many examples. Each large pension fund in the US and many other large investors have a portfolio that's fairly similar. They have US domestic assets, they have foreign assets, they have fixed income, and they have other things. And if they know and understand that there's a 15-year cycle in currencies in which major currencies move up for 8 years, and then they move down for about 8 years, then they can make asset allocations and move their assets overseas to get a benefit from those currency gains that can be substantial. On average, the euro has risen 114% in the past 3 cycles. So that would be on top of your equity returns. And over an 8-year period, that's a pretty nice outperformance. So that's how we can help. And by the same token, they should come back to the US when the cycle goes the other way. And of course, the opposite then holds true for investors outside the US. So that's a very tangible way of applying the work that we do to their asset allocation to benefit from that while they do their own stock selection and industry group selection and whatever else they invest in.
Thank you for that. There's been a lot of really great pivots in the business and how you help your clients. What's next on your radar?
It's very important to know where you are in the forest, whether you're in the middle of the forest or at the edge of the forest. And when we look back at the Dow Jones Industrials, for example, over the past 300 years, there are only 3 points at which we've been at this kind of an elevation. One was in 1929, the other one was in 1999, and where we are today. And in each of those 3, the markets were significantly overvalued. We had speculation that's become worse with each time. So the speculation today is unbelievable when you factor in cryptocurrencies and people buying meme stocks and taking investments advice from TikTok without knowing exactly what's going on. So what we're having is a parabolic rise in the Nasdaq index. And these parabolic gains, they always end with a major crash. And we're sitting on the cusp of that crash right now. People expect what will happen now is that the Fed will start to taper. They see that as making the US dollar stronger. And obviously the bond yields then will react to that. And perhaps the tech stocks will come down a little bit. But what our work is telling us, and very, very strongly so, is that when the equities collapse in the Nasdaq, the S&P and the Dow Jones will hold up relatively well. That's what they did in 1999 and 2000. And then they fall also by a later date. But what will happen is that foreign investors are overweight U.S. assets and have been for several years. They're overexposed to the U.S. dollar. They're overexposed to U.S. treasuries. So as they do a risk-off move, we will see the dollar fall instead, and we'll see bond yields go up instead, and equities are falling. So we'll have a trifecta of negative price actions from a foreigner's perspective. And this will come as a complete surprise to most U.S. investors. So that's what we see, and this is on the real horizon right now. And that, of course, will be very bullish for gold and commodities, which are only 4 years into a 15-year mega cycle. So we see commodity prices double over the next 4 years. Currency is going up dramatically against the US dollar, and bond yields going up as well, because we can't have this kind of level of inflation that we have today without a reaction in the bond market of some sort.
Fascinating. I think for the audience, if you'd like to learn more, you definitely have to reach out to Ulf because it's a constantly evolving and changing environment.
The review of emerging trends, you can ask for a free copy through our website. We're happy to provide that.
Yeah, I get them and they're very extensive. Definitely encourage the audience to get a copy. So Ulf, here's my favorite question. What is your superpower and why?
Well, the superpower that I have, if I have any, I think derives from the fact that I have used the same method of analyzing the markets over 40 years. I call it visual investing. I have a set of charts that cover all major currencies, all major interest rates, all major equity markets, and key commodities. And I keep those updated. And whenever anything goes, so to speak, off the tracks, it tells you something is starting to happen here. And you can go back and investigate it. And with our models that are mean reverting based on momentum, tells us that this is going to change. And typically that happens when people are at their most bullish or at their most bearish, whether it's in the short term or in the long term. So by keeping that same approach constant over 40 years, combined with having actually managed currencies for 30 of those years and having suffered the ups and downs of all the market moves of the past 40 years. I mean, today's meme investors, they think a 2% decline of the Dow Jones is more or less a crash and it's time to buy the dip. They just haven't lived through an October minus 22% in 24 hours kind of an event. And they don't know what that will feel like when that comes. So I think the experience of having dealt with currencies, having managed large portfolios for institutions almost 3 decades, and combining that with an approach of looking at the markets that is consistent. And even when that conflicts with what you think the fundamentals are, I stick to what the charts and the models tells us because they turn out to be more accurate than what people think is going on.
Thank you all for your time. There's so much more to talk about, but I'd like to keep these kind of short and sweet and give our audience more to come back for and to reach out to you directly.
Well, thank you very much. I appreciate that. And like I said, a free report is available at our website. And I think they can also get it through PrimeAlpha, of course, because we're part of your platform, which we have enjoyed being for now a number of years.
Thank you so much.
Thank you.